This conference will now be recorded.
Hi, everyone. Welcome to our EWPN event today. For those of you who aren't familiar with us, we are the European Women Payments Network, and we are the first and only pan-European community for women focused on fintech and payments. We're also a nonprofit organization dedicated to champion diversity, equity, and inclusion for everyone in the fintech community. You can learn more about our programs and membership at ewpn.eu. Today, we're really excited to co-host this event with the European Payments Consulting Association, EPCA. We'll be chatting with them about the buy now, pay later payments trend that we're seeing in the industry. Joining us today is a panel of experts who will speak about this topic. Our first panelist will be Szilvia Egri. She's our EWPN country ambassador for Hungary, and she's also an entrepreneur and senior consultant at FemTechLab. Next is Mikko Rieger, a payments consultant in Finland. We also have Marco Fava from Clever Advice in Italy. And we'll round out the panel from Chris Jones from PSE Consulting in the United Kingdom. We also have a great moderator today. Thanks so much to Ronald Velde. He's a partner at Connective Payments in the Netherlands, and he'll help moderate the discussion today. A little bit about housekeeping before you start. If you could please mute your microphones, that would be great. We'll take questions at the end of the panel, but you can type in your questions and any of your comments anytime during the event. As you know, we're also recording this event, and so we'll be able to send you the video link afterwards in case you want to rewatch it or send it to any of your colleagues. And from there, I'll turn it over to you, Ronald.
Thank you, Regina. Much appreciated, and good afternoon, everyone, and welcome to this webinar. My name is Ronald Velde. I'm managing partner at Connective Payments, and first of all, I would like to thank EWPN for working together on this webinar. We are really delighted that as the European Payment Consulting Association, we have this opportunity to do this together. And that the EPCA is a European Association of Payment Consulting Firms. And as you've heard from Regina, we're present with consultants from Italy, Finland, UK, and myself from the Netherlands, next to Szilvia from Hungary, from the EWPN. So a little bit about myself. Connective Payments is a fintech and payments consulting firm focusing on strategic partnerships and transformations, new product development for issuers and acquirers, and risk and compliance services. And personally, I've been working in payments for the last 20 years. So, for example, at eCommerce Worldline, and I've served many clients as a consultant at Visa, ABN AMRO, EMS Pay, Brinks, and Worldline, helping to grow their business, and also advised on propositions like buy now, pay later. So we will do a short round of introductions, and I would like to start with Szilvia, so she can introduce herself as well.
Thank you, Ronald, and welcome to everyone. Just some words about me. During the first 2 decades of my professional life, I've worked for banks with different sizes, and here I got to connected with credit cards. As a business owner, generally as a business owner, I've been responsible for projects related to electronic payments and digital services. I had the chance to be among the core member of a project aimed to set up a new bank from scratch. And since 2017, I've been supporting companies as an independent consultant. And as such, I'm highly passionate about the new kind of fintech ecosystems, the way how technology helps transform the financial sector. And last but not least, occasionally I write articles as a guest author for FinTech Zone. This is a well-recognized online portal here in Hungary, aiming to support the local fintech community and educate the market. Thank you, Ronald.
Great, thank you, Szilvia. I'm really to have you in the panel. Marco, could you follow?
Sure. Thank you very much, Ronald. Good afternoon, everyone, and welcome to this webinar. I'm Marco Fava, Managing Director of Clever Advice, as member company of the European Payment Consulting Association. I have been working in the payment industry for over 20 years, mostly helping PSP banks, schemes, and large merchants in identifying business opportunities, and also in leveraging regulation as a way to exploit new markets and widen the customer reach. Most recently, I've been involved in helping credit scoring customers within the BNPL space, in designing processes to digitally onboard merchants, and in innovative techniques in authentication and KYC. Thank you, everyone.
Thank you, Marco. Chris, please.
Afternoon, everybody. My name is Chris Jones. I am the Managing Director at PSE Consulting. Whilst the firm's been around about 30 years, I've been in the payments industry for about 15 of those. We've worked in buy now, pay later since its very early days, since about 2016 or so. And we've worked on buy now, pay later across Europe, but also in North America and in Australia, all mature buy now, pay later markets. And we currently work for many of the major buy now, pay later brands across Europe. Ronald, back to you.
Thank you, Chris. And last but not least, Mikko, go ahead.
Yes, hello. I'm Mikko Rieger. I run a small boutique consultancy in payments, Rieger.fi. I'm probably the most northern part of the European Payment Consulting Association. In my previous life, I was a corporate guy with companies such as Microsoft and the Nets Group. So if you look at FinTech, I'm less fin, more tech. Was never a banker. I work now with banks, merchants, and also fintechs, mostly in the Nordics and in the German-speaking regions. Focus on obvious consulting projects within strategy, product partnering, commercial aspects. I'm happy to bring here the Nordic view on BNPL. I'm happy to be here. Thank you.
Thank you, Mikko, and yeah, thank you, everyone. I'm excited to work with this panel. There's so much knowledge here, which we would like to share with you today. And you can also interact with the panel. So we will use some time of this webinar, and feel free to post questions in the chat so that we can respond to this. We will discuss product propositions on BNPL. How this relates to credit cards. We will discuss regulations on BNPL and the merchant view and the provider strategies. And what we see is that BNPL is becoming a mainstream payment method, and it's already out there for a while, but it has established itself first in e-commerce and is now starting to branch out into physical retail. And the first topic we would like to talk about is the issuer's perspective. So how do card issuers look at the BNPL, and does BNPL actually compete with credit card, and how does this work and what is happening there? While consumer credit already exists for a long time, still BNPL is now becoming very popular. So Chris, maybe you could shine a light on this and also give your view on how this is growing so fast. If I look at Klarna, who has added 60 million users in 2020 alone. So what does this do to the market and to the credit card issuers?
Well, it's not always great to start off a conversation with doom and gloom, but I think traditional credit issuers, at least in the mass consumer credit market, are and should be extremely worried about the rise of buy now, pay later. If one looks at the way in which younger consumers buy all sorts of products and services, they're looking for instant gratification, They're looking for an easy interaction with a product. And unfortunately, the onboarding process and the engagement process that most traditional issuers have with their consumers requires those consumers to go out a number of weeks in advance of their shopping journeys, decide which credit card company they want to engage with, onboard with those customers, wait until the card turns up. Approval levels typically only at about 40%, so you're saying no to 60% of customers who are asking for your product. And that's in stark contrast to the buy now, pay later experience, where I see a pair of trainers that I want. I may not be able to afford it this month in my pay packet, but if I can dip into next month's pay packet, I have a 6-week repayment cycle, I can increase my spend. Typically customers uplift their basket value by about 30%. So I can dip into my next month's pay package. I can onboard in the payment journey. I can see offers before I get to the payment page, so I know that I can change my behavior. And it's a nice, easy process of paying those bills off. Particularly, you see some of the models that originated out of Australia, where it's entirely predicated on a 2-weekly repayment cycle over a 6-week term from a card that you've pre-registered. It's just very easy. It's immediate. I don't need to plan ahead. The average outstanding balance is typically only around the 60 to 70 euro mark. So my total outstanding balance isn't the 5,000 to 10,000 euro that I may be given on a credit card. And every time I get credit checked, right? So this is not a relationship that you form once and then reuse. It's constantly being evolved by the buy now, pay later providers to take into account how quickly you repaid it, how you repaid it, whether they had to chase you up. So it's a much more dynamic interaction between the consumer and the merchant. And I think all of these things coming together mean that it's really difficult for traditional issuers to get into the market, because unfortunately both their product and their distribution doesn't fit with the needs of the customer, and it's very, very difficult to put that square peg in the round hole of buy now, pay later. So when we've worked, and as I said, we've probably worked for the last 5 or 6 years with traditional not just issuers but also acquirers and payment schemes on how to adjust the model to defend against this change in behavior. It's actually a tremendously difficult thing for them to do.
Thanks, Chris. So, Marco, maybe you can add something from the perspective of whether it replaces then overdraft, or it replaces the credit card credits that consumers have. Do you see this from your practice?
Yeah, I do agree with Chris that buy now, pay later certainly has a number of advantages, let's say, or I would say like different things than traditional credit cards. However, I think that in the end, the two will coexist. And because I think that there are some overlapping on the target customer that they apply, but I think that buy now, pay laters probably applies more to younger people and whoever might have not built yet a credit history to get a credit card, or more than one, let's say. And also it might extend the credit line of a credit card holder. But also I think that the buy now, pay later, since yes, has an extremely pleasant onboarding experience, very few credit checks, and falls very much into the instant instant credit or and so certainly the experience is quite pleasant because everything happens at the checkout phase. However, I think that it sounds somehow too good to too good, and sometimes only the good things are perceived by many customers, because I think that first of all, once you take into account potential late or recovery fees, then of course the cost of a BNPL transaction can massively exceed the cost of interest of a traditional credit card. Of course, you don't do pay now, pay later necessarily because you want to miss payments, but that of course can happen. And also, I think that if you are a good credit card holders that you pay everything in time, then it happens that your credit scoring can be positively impacted, and that will certainly be a good thing, especially if you later on you will apply for a serious credit like a mortgage or something of a larger amount. While of course whether you miss a payment or whether you pay on time on buy now pay later will have no impact, because most of the time, even if you miss a payment, then this will not impact your credit scoring, because the buy now pay later provider will not get in touch with that credit agency most of the time.
Thanks, Marco. Yeah, thanks. And Chris, maybe a last point on this topic. Which options do you see for traditional issuers to compete with BNPL?
Well, I suppose maybe rounding up then this particular topic on good news. So all of the capabilities that are required for a traditional credit card issuer to not just meet but exceed the experience that customers have with buy now pay later are useful across the book, right? So if we look at instant onboarding, obviously very important for buy now pay later, but if I can get instant onboarding working for buy now pay later, I can use that on my traditional credit portfolio. If I can do instant credit decisioning, if I can do line item billing, if I can do a whole range of services that are required to fend off buy now pay later, then I can extend that across my portfolio, not just of card and payment related products, but also mortgages and loans and the whole range of services that a financial institution provides. So I think many institutions already have programs in place to address these kind of issues from a capability point of view. So, I think banks are heading in the right direction. I think what would worry me more is some of the structural issues that some of the organizations have, and this partly comes from having sold off their card acquiring holders over the years. So, everybody on this call in every market will have had some experience of large institutions, whether they be NatWest in the UK or UniCredit in Italy, selling off their acquiring portfolios to independent entities. Now, if you have no relationship and ability to integrate with merchants, it becomes very, very difficult to do buy now, pay later. It is unlikely that you are going to build the capabilities required to integrate with a merchant, to allow for onboarding, to allow for offers to be made, just for buy now, pay later on its own. So on the pure issuing side, I think banks are heading in the right direction. There's a whole, weight of argument about why they should build these sorts of capabilities. But on the merchant integration side and the ability to surface these offers to consumers, that I see as being a long-term strategic gap in the market. And it's interesting to see how in some markets like the UK, traditional banks are coming back into the acceptance market. Again, not just to address the BNPL issue, but it does give them then some capabilities, a pipe, a distribution network, and it's this, so they can solve the product problems, but they can't solve the distribution problems unless they've got a merchant. It's not necessarily acceptance, but a merchant engagement channel.
Yeah, well, clear indeed, Chris. Thanks. But that's good news. So there is a way out, and it requires investments. But that's a good wrap up. Thank you. And what we've heard already is that what Marco mentioned is that the buy now pay later is mainly used by young shoppers, millennials, Generation Z, and they use buy now pay later at much higher rates than older generations. Also in the in-store environment, for example, where you see that already 15% of millennials use buy now pay later. And what we also see is that to protect this group of users, there's regulation coming up. So we would like to talk about regulations a bit to share with you in what is coming up in the various European markets. And maybe we can start with Szilvia today on the Hungarian perspective on regulations. Szilvia, could you share your view on what is going on in Hungary?
Yes, thank you. Yeah, so it's often heard that Hungarian regulations are in many cases stricter than in other European countries. And actually, I can confirm this. Here in Hungary, the Credit Institutions Act is pretty straightforward as to what qualifies as a loan of money. And in order to be a BNPL provider here in Hungary, you must have a minimum payment institution license and should meet all the legal requirements applicable for PIs. Or, of course, you can provide loans as a PSP or e-money institution as well, but with limitations. So from your own funds. So all in all, here in Hungary, and maybe this is not surprising for local people. Here in Hungary, the BNPL is, so it's not here yet, and actually it's not easy to start BNPL service here in Hungary because the regulation and the framework seems to be set up.
Yeah, okay, thanks, Szilvia. And maybe Mikko, do you recognize these kind of regulations from other countries? And could you share perhaps what is coming towards various countries? You're mute, Mikko. Mikko, we can't hear you.
We can't hear you, Mikko.
Let's fix the technique. And Marco, maybe you can share your view on the regulations.
Yes. Yeah, I mean, several regulators around the world are actually, thinking that the BNPL should be regulated because traditionally BNPL is considered a payment service, so a delayed payments, and so doesn't really fall into the credit category. And that's why under most regulatory frameworks around the world, it is not a regulated market. However, especially because the volumes are growing so rapidly, and along with these volumes growing so rapidly, there are also a number of people that can engage into BNPL transaction, but then they cannot repay or they miss some some repayments. And of course, these are growing both in the absolute term, but also as a ratio of the transactions. Then more regulators are willing and thinking to introduce regulations that embrace BNPL within the credit, within the existing credit regulations. So I'm expecting that, especially from two countries, Australia and the UK, there will be soon regulations on the BNPL market. I know that recently the IFA in Australia have introduced, as I think of early March, a BNPL code that sets industry practice for the sectors in Australia. And yes, I mean, IFA is an association. It is not an authority, but the authority has recognized that BNPL operator should follow those best practices in order not to stimulate too much people to actually buy much more than they really need, and later on finding themselves with repayments that they have engaged with, but in the end they have difficulties in repaying. Also in Italy, the Bank of Italy is monitoring very, very closely the consumer credit market that has been historically, and they're doing all they can to keep the consumer credit manageable, and so they are welcoming regulation in the BNPL space. And a number of countries in Europe, I think the government of Austria and Sweden, I think, they are pushing the European Commission to amend the EU Consumer Credit Directive that is actually planned for the end of Q2 of this year, that and they aim that this directive will include some references to the BNPL market as well.
Okay.
So we will see across the globe a number of authorities introducing more and more regulation on the sector.
Yeah, yeah. And Chris, maybe to close off this topic, could you, do you expect some regulation specifically, so like age limitations maybe, or a cap on interest rates, or what is your view on this?
I think we'll probably find that the UK will regulate in advance of most other markets. I don't know, we have the unfortunate situation of typically being a petri dish for many of these payments innovations, you know, open banking included. So some of you may be familiar with the Woolard Review, which was carried out relatively recently, published February this year. I think the irony is that actually most of the large buy now pay later providers will welcome regulation. They see it as building barriers to entry for perhaps less scrupulous entities who take advantage of consumers, who lend to consumers who you know, cannot pay or won't pay, and bring the industry into disrepute. So, you know, one only need to speak to the CEOs of many of these large firms to hear them actively saying, we want regulation of an appropriate form. So I think this regulation will not seek to remove, or at least it shouldn't. We'll have to see how European regulation treats this issue. But in the UK here, at least, it will be more around making sure that there's transparency around any charges and pricing. Typically, it's free already, which makes it very difficult with the credit card industry to say buy now, pay later is a very poor thing, because they're charging for a service which is being offered for free by buy now, pay later. There's likely to be regulation around affordability checks to make sure that customers really can repay. But if all I'm checking you for is, you know, €70, that's not going to be a significant barrier to entry in the same way that it would be giving you €2,000 or €3,000 for a credit card. There's likely to be regulation around communication, so making sure terms and conditions are clear. If there is an APR at any point, that those are nice and clear. And perhaps most importantly, and I know there was a question in the chat stream about this, so at the moment, and Marco mentioned this, typically the credit reference agencies don't see any outstanding balances that you hold on a buy now, pay later account, nor do the buy now, pay later providers leave any fingerprint on the credit reference agency's history of having asked for a credit, for a credit reference. Now they do that intentionally. It's likely to be that the buy now, pay later providers have to move into the scope of the credit reference agency's books, so that other entities who may be lending to you know that you have a balance. And then if you're holding a balance with multiple buy now, pay later providers, that is then visible to everybody in the market. So I'm actually a believer that in buy now, pay later regulation being an enhancement, that it will make it more difficult for traditional providers to throw stones at buy now, pay later and say, oh, well, they're only operating because they fall outside the regulations. And also it will allow the buy now, pay later providers to say, well, we're regulated like any other entity, you should trust us. It's just a different model, it's a different way of you getting access to your credit. On top of that, it's also worth bearing in mind that if we look at providers like PayPal and Klarna, both of them are now regulated banks. And if I'm a regulated bank, you can chuck whatever stones you like at me. I can operate in Hungary, I can operate wherever I like as a traditional credit provider. I can complement my new buy now, pay later schemes with traditional APR driven products which fall under the regulations as they stand today. So I think what will happen again is that it's not just that the regulations will come in and encompass buy now, pay later providers, but also those buy now, pay later providers will move into the more traditional space of traditional consumer credit, because what they will want to do is to complement their free to consumer funded by merchant buy now, pay later commercial models with more traditional APR based products for those that don't want to pay it off at the end of the 6-week period and they want a more revolving relationship.
I just wanted to add that I think that most regulators wants to regulate the buy now, pay later, mostly because they don't want consumer, especially those economically weak, let's say, that they open account and engage in buy now, pay later transaction with many buy now, pay later providers, and so their credit worthiness picture is not really transparent to everyone, and they could default on that.
And that's why one of the things that will almost certainly come out of the Willard review, probably in the next 6 months or so, is that much as traditional financial entities have to share their credit information with the credit reference agencies, they will have to also share information with the providers. Now, I think there's an interesting moral hazard that regulation creates in the market at the moment. So because most players recognize, particularly Klarna and ClearPay, as Afterpay is branded in Europe, they know regulation is coming. So there's a bit of a push to get out into the market to acquire as many customers as possible in advance of the regulation occurring, because one of the things that's being considered here in Europe is that at the moment, in the UK, is that at the moment I can go to a merchant, I can onboard at that merchant, and that merchant promotes effectively the buy now, pay later offer. I haven't gone to the buy now, pay later website, I've gone to the merchant website, and that merchant doesn't need to be regulated. And the communications that those merchants make with consumers about those products are quite difficult to control. So I think it's also likely that there will be some burden placed on merchants themselves if they are allowing consumers to onboard to the buy now, pay later providers on their site. They will need to be what they're called in the UK is agents, credit agents. So more burden will be placed on the merchant community, because it is an issue at the moment that consumers the communications with consumers aren't sufficiently controlled. So there will be some change, and again, this is why there's a lot of rush out into the market at the moment to get as many customers as they can before one of their major distribution channels, which exists today, may well get constrained.
Thanks, Chris. Talking about merchants, the merchants have a particular role in BNPL in the sense that they're very happy with BNPL. Looking at the increased sales they generally do, the larger basket amounts, but they generally also pay more for BNPL services than for credit cards. And Szilvia, maybe you can say something about that, because you call it a double-edged sword for the merchants. And I think it's interesting to share your view on that part.
Yeah, actually, when I'm thinking about the double-edged sword, I'm rather thinking about that merchant need to be cautious what kind of partnership he's looking for, because there are different distribution models, as I think Chris mentioned. So BNPL can be distributed via merchant directly, via network, via banks. There are also BNPL providers who provide a service white label, so both merchants or banks can customize it for themselves. But and when I'm speaking about double-edged sword, actually I'm thinking about that distribution model when the BNPL is distributed via merchant directly, because in this model, if and it's a big question in this case, if who communicate with the consumer, and this was also mentioned by Chris. I think this is critical if merchants can still communicate with the consumer, or BNPL provider will take over this communication and stand between the consumer and the merchant, because in that case, if a BNPL provider owns the consumer communication, he can. This is not the best word, but manipulate the consumer, which merchant they choose for particular products. So that was my way of thinking.
Sure, double-edged sword, yeah. Thanks. And Mikko, I see that you're back, and hope technology is working now. I think it's not working.
It's still not working, I'm afraid.
We don't hear you, unfortunately. So, Marco, if I look at the merchant view, so you see a development, well, rapidly increasing actually to rolling out BNPL in physical stores. And it's quite a substantial number now, and will increase further when after COVID stores will open up. How do you see this developing?
I see potentially, a number of physical stores benefit from BNPL.
I hope yes.
Especially in some countries, and I think that having seen the success of BNPL online, a number of physical merchants are actually willing to engage with BNPL provider to provide BNPL at the physical store, because they kind of don't want to be lagging by online sales, and since BNPL has provided benefits to increase both conversion as well as the average basket size online, they might expect something similar happens at a physical store. That's why I see a number of physical merchants to be willing to engage with BNPL providers. One comment I had on the regulation before is that yes, I see also, especially the larger merchants, welcoming regulation in this space, so that since the volume are increasing very rapidly, they are of course willing to have BNPL not being seen in a gray area, and that is I certainly share this view. I also think so that regulation might bring some advantages to larger players, but also some advantages to smaller players as well. And especially to smaller player, it might bring, has to be seen, of course, it might bring some advantages, because since each BNPL provider usually allocates a budget to each merchants per day, then they might take on a certain value or a certain number of transactions at that merchant per day. So if that runs out, of course, a customer might be willing to engage in a BNPL transaction, but if no more funds are available from that BNPL providers, of course, they cannot use the service. And since introduction of the regulation might restrict the number of customers that will be allowed to use the service because of the credit checks, then smaller players are less likely to actually reach that that threshold of allocation of funds per merchant per day than the larger merchant, because that, of course, is an issue that will not really be in effect, does not really affect the larger merchant that, of course, usually allocates a much larger fund per merchant per day.
Okay, thanks, Marco. Yeah, I hope Mikko is back now for closing off this topic, and otherwise we go to the questions and I give back to Regina. Mikko, can you test once more? No? Then I give back to Regina for some question answers to the panel, because there are multiple questions in the chat. Regina.
Great, thank you so much. For everyone who hasn't had a chance to type in any of your questions, there's a little chat picture at the top of your top right-hand side of your screen. If you click on it, you can see all the questions that we already have in there, and then we'll start this session now. So the first question is from Helene. Hello, can you please explain how BNPL impacts credit ratings? I think we might have had a bit of a chat about that, but does anyone want to take that question really quickly?
I'm happy just a bit. Well, so at the moment, most buy now, pay later providers intentionally avoid leaving any form of fingerprint on CRAs or credit reference agencies. And they do that because one of their differentiators is that they don't affect your credit history until you move into default, that is. That does create systemic problems in the market. And as we discussed earlier, that's likely to be one of the areas that gets regulated. Not that it will necessarily change the onboarding process, but to Marco's point, allowing other people in the credit market to see where there are pockets of credit, that needs to include some of these buy now later providers. But again, my view on this is that, if you have an average outstanding balance of €70 versus a credit line of, €7,000, there will be some outliers who have very, very high outstanding balances, but I don't think it's going to fundamentally change the nature of the market when they are forced to disclose the credit position of consumers to those CRAs.
I just, I think we've talked about this, this topic extensively before, but just wanted to add that once regulated BNPL, of course, they will interact with credit agency, and so the credit scoring of each customer will be impacted, but also on a positive side, because if you've used a number of BNPL provider and you've always paid on time for for a long time, although the value of each transaction might not be huge, but if you interact with many and you always paid on time, that might also have a positive impact on the customer credit rating.
Great, thank you. Moving on to the next question, also from Helene. Klarna has announced the launch of a BNPL independent of the merchant being enrolled by Klarna. How does the economic model work here, as I assume the merchant would not take any of the funding cost?
Well, the merchant still the consumer still ends up with the merchant, and therefore the merchant pays. So the reason that Klarna are doing this is the same reason they're diversifying their product mix, is to get more touch points with the consumer, to begin steering consumers towards certain merchants, because they can get, probably they're not charging for it at the moment, I would guess, but if I can give you a customer, that's more valuable than just serving the customers that you already have. So I may actually charge you extra. If I've given you the customer and then you use buy now, pay later, I may charge you 500 basis points as opposed to say 200 basis points if they've just arrived at your website and then I've given them a buy now, pay later offer. So it doesn't necessarily change the economics, although I'm sure Klarna are investing in it in order to have the potential to change the economics. And it's part of this diversification strategy.
Great, thank you. The next question. Oh, sorry, Marco.
I was going to say that yes, it might be different model, but I mean the customer always, of course, will have to pay a fee for the service.
Right. Okay. Thank you. Andrew sent the next question. Are there any buy now, pay later providers looking at credit worthiness on a per SKU basis, in addition to the per consumer basis?
It's always done on a per SKU basis. So every transaction is scored. So you may have a situation which is slightly unusual, consumers aren't familiar with, and you wouldn't have this in the credit card world, where even though my open to buy is fine, I will say yes for 5 transactions, then I'll say no, and then I'll say yes for another 5 transactions, right? So every transaction is scored, every transaction makes a decision. In the cards world, you would just get a decision against the open to buy, unless there was fraud, but in a normal case, you get a decision against the open to buy. If you max out your open to buy until you've paid it off, the answer is always no, right? So it's a very, very different model. And again, it's one of the reasons why traditional issuers have a problem, which is that they don't look at each transaction, they just look at the block, right? So a 5,000 euro credit exposure is very different to a 50 euro credit exposure, and each of those items gets paid off typically. Now, at least the model that is growing now, not the invoice-based model of the past, but each of them gets paid off on its own as well. So you should see each transaction really as a separate line item rather than sitting on a statement of account that gets paid off at the end of every month.
Although some BNPL provider, they also look at the kind of let's say credit history of their client, of their customers of customers that have repeatedly perform BNPL transaction with them, of course, because they have visibility on their own customer and their own transactions. And yes, they do decide transaction by transaction, but if a customer have performed a number of transactions with them, they usually look at this history as well. at least in some of my experience.
Great, thank you. The next question is from Florian. Thanks for the valuable presentation. You highlighted that issuers are having a hard time adjusting their business model to fend off or integrate BNPL. Could you share some practical examples of pain points and resolution?
How many do you want? I mean, I'll just give you one. So typically credit card providers can only charge one APR, right? You have a product, it has an APR, it's 19.9%. Any transactions that hit that account, they need to have 19.9% APR. Now, if you have a buy now, pay later offer, typically that could either have a different APR to your 19% or it's free. So when I statement you, I have to have a series of line items that say 19%, and then I have to have some line items with a different APR, sometimes 0. Most statement printing, very parochially, just the printing, can't cope with having more than one APR on it. That's a very boring thing, but it's incredibly important because I'm mandated under European regulations to give you a statement that tells you what I'm going to charge you, but I can't even do that.
Yeah. Also, in my experience, legacy is something that keeps adapting to this model of traditional issuer significantly, although they understand, and several of them, they would like to actually cope with the flexibility of the buy now, pay laters to treat each transaction separately and with different terms and conditions, especially related to the interest or no interest that they will charge them.
Thank you. And Ronald and Szilvia, anything to add?
Sorry, another thing is that, which is also another difference between buy now, pay laters and credit card, is that credit card sometimes, or at least in markets where interchange fees are higher, they offer some, some perks or some insurance coverages and other services associated with the card, and buy now, pay later, they don't, because they basically don't charge anything.
Szilvia or Ronald, anything to add?
Actually,
Szilvia,
I would go. Okay, Ronald, go ahead.
No, I was pointing to you, Szilvia. Go ahead.
Okay. I just wanted to mention that there is another question in the chat, and maybe I would react on that because that's interesting as well. So we can go ahead because we have few times.
Okay. Yep.
You were really in my mind, Szilvia, because I saw this topic we have been preparing. Yeah.
Yep. Let's see. Ina sent a question. Do you think that BNPL can give a significant push to instant payments and open banking adoption? It could be an interesting alternative, moving transactions from cards.
Szilvia, can you take this one?
Yeah, I would take it first if it's not a problem, because actually we also discussed this with Ina. Ina is a Hungarian lady, so we have a tough discussion on this topic, and the occasion why this question came is because last year the Hungarian instant payment system has been launched in Hungary, and I think it's a very interesting combination. So if you combine the PSD2 PIS, payment initiation service, with the instant payment system in a country, that can result an interesting opportunity and interesting solutions if we take into consideration that you can exclude the card network from the transaction. That's all.
I just want to add that I think that some of the BNPL providers I was in touch with, they are actually looking at open banking to perform some credit checks once regulation kicks in. And this, I think, has the potential to mitigate the impact of requiring a credit check on the customers from the upcoming regulation.
Great.
Just one comment on this. So the reason that margins are coming down on buy now, pay later is because they ride on the credit card or on the card rails, right? So what I do is I pre-auth you on onboarding. I've got the money booked on your open to buy. I then decrement the pre-auth with an auth for every 2 weeks, right? That's why margin can come down, because risk comes down, because I've booked the money against somebody else is taking the risk. As soon as you move to open banking, then my risk goes back up, right? Because I'm waiting for you to pay. I have no insight into what your account's doing. I have to chase you. Now, more risk means, you know, basically that the margins will have to go back up. So I think it's nice. I don't think it's going to change the world. It'll be one of the options that is presented, and particularly in markets like Germany, where card payment isn't dominant, you could see where open banking could be a nice way of paying off your statements. But equally, open banking is nascent still in Germany. So I think that there is a role for it, but the irony is that the rails provide a effective risk management tool that open banking doesn't.
Sorry, but may I ask one thing from Chris for this comment? So if you combine the instant payment with payment initiation, why do you think that the payment will not happen immediately, as in case of card payment? So what is the difference, in your opinion, between?
Well, so what I can do is that the whole point is I'm not supposed to be buying it now, right? That's why I use buy now, pay later. I'm paying later. So what happens is that I pay in 60 days, right? So I'm not carrying out my open banking transaction while I'm in session at the merchant. So I pay it off in 60 days time. So that's 60 days worth of risk that the buy now, pay later provider has to take. If I use a card as a payment, I pre-auth. I have no risk because the issuer takes the risk. So it means that the margin that I need to charge to cover that funding period goes down, because the write-offs that I take are very, very low. So you can't have if you had a PIS transaction at the moment of while the customer's browsing, that's not buy now, pay later. That's buy it now, pay it now.
Sure. I mean, certainly, yes. However, if you look at short term, that's exactly the point. And if you look at that specific transaction, that's the case. But I guess if you're trying to use open banking to credit score a customer, you're looking at a longer period of time. You're looking at what is the history of this customer that is asking to use a buy now, pay laters. And by using open banking, I'm not saying it will solve all the problems, absolutely, but it might add another pinpoints and some extra information about whether these customers pays on times or this repayment behaviors through the number of their account. So is an extra information that might be beneficial is correctly used.
I can't see it happening even at onboarding. So merchants are using buy now, pay later to get rid of SCA on cards at the point of purchase, to introduce a PIS call in markets where open banking, or sorry, an AIS call in markets where open banking is nascent, reintroduces SCA in the checkout journey and produces a poor experience for the consumer because they're not used to using it. So I think, yes, in theory, the reality is that they're on a customer acquisition drive. They want to make it as quick and easy as possible. They want to take your email address. They want to take maybe your date of birth and maybe your delivery address. That's it. They don't want anything else because it interrupts the checkout journey too much. It's got to be quick, and it's got to be easy, and it's got to be instant.
Absolutely, but I'm thinking more about in a few months or in a year time, where regulation kicks in, and so the buy now, pay later will need to perform a credit check. Then having the opportunity to use open banking, it might be another options to fulfill some regulatory requirements. Not now, absolutely. Now things are much
well, yeah. 3 years after open banking.
Thank you.
2.5 million users, so it's going to be a long time before that takes off. that's another topic of conversation.
Yeah, absolutely. And I know we are at end of time. We're a few minutes over. We do have a few more questions left, but what we'll do for the audience where we haven't had a chance to answer your question, we'll take those offline and we'll make sure we answer them and send them out to everyone who had a chance to attend today's event. So I just want to thank everyone who joined today. Thanks so much. We hope you found it very interesting. And to Ronald, Szilvia, Mikko, Marco, and Chris, thank you again for sharing valuable insights. We've recorded today's event and we'll send it to you all in a few days. You'll receive a link for that. It will also post it online. We do have many exciting events planned. You can learn more about them on our website, ewpn.eu, or you can reach out to us at any time. Okay. Thanks again so much for joining, and appreciate your time. Have a good day, everyone.
Thanks, everyone.
Thank you,
Bye-bye.
Regina. Thank you, everyone. Bye.
It's not letting me leave. Not that I object, but it doesn't let me. The leave button doesn't work. I'm stuck in here forever.
Oh, are you really?
It's obviously not just me either.